welcome back to another video. Today I'm going to be speaking of filtering setups and entries. So essentially all this is finding trades that have a higher probability of being winning trades. So throughout this video I'm going to speak on a lot of topics, and most of the topics that I'm going to speak on, or rather all of them, I've mentioned previously. So some of my recent videos, on the OTE, premium discount, liquidity, order blocks, imbalances, all of that stuff, I'd recommend going through it beforehand and then come into this, because this video is essentially going to be blending most of those concepts together and showing how you can use them in conjunction to make trades that are more likely to be winning trades. So let's get into it. So cool. The first thing is we have our setup and our entry, right? So to me personally, what this means, our setup is essentially like everything. This is your context, and there's a lot of factors to consider that we're going to go through. And your entry, rather, is just a singular thing. It's your point of interest. All that means is, what are you entering off of? An order block, an imbalance, whatever. It's going to be one thing. So yeah, the first thing, right, we need context for our setups. So what do I mean by context, right? Again, like I said, if you haven't gone through my previous videos, it's going to help you a lot if you do, because I have a video on kill zones, I have a video on premium and discount, and the news and the high time frame trend, they're quite self-explanatory, right? So first of all, kill zones. In simple terms, kill zones are times where it's more favorable to trade. And if you watch my video, I'll get into that specific video, I'll get into why it's more favorable. By news, what I mean is, do you want to trade when there's news happening, there's news events on Forex Factory? Because that news could lead to manipulation. It could lead to, just not clean or simple price action. And you don't really want to be trading when price is consolidating, right? You want to trade when price is trending clearly. Premium and discount, I'm going to show you guys on the charts. And of course, your high time frame trend, you don't want to trade against the trend, because you want to be in line with the direction that price is headed in. For our entries, you're going to have different points of interest. You're going to have your order blocks, you're going to have your imbalances, and so forth. By considering RR, what I mean is, right, your RR is your risk to reward ratio. So a lot of people I see, and I was that person as well, but fall into a trap of picking specific points of interest that will give them a higher RR. And what might happen a lot of the time, price may not reach that point of interest. So you have to be sensible, and sometimes it's just about getting in the trade rather than trying to maximize the profits. But cool, let's just get straight into the chart so we can see how to apply all of this. Okay, cool. So here we've got the Euro USD weekly chart, right? And to me, this chart is clearly bearish. I have a video on liquidity, and that's the reason. Well, by that I mean, if you watch that video, you'll understand the reason that I've marked out this wick here, and this dollar sign essentially means that it's a point of liquidity. This is my next draw on liquidity, and it's what I expect to get taken out, let's say next. And of course, this is a weekly chart, right? So we're not going to be trading the weekly chart, but we need it to understand the direction that price is headed in. So cool, we can come down to our daily chart now. So on our daily chart now, right? Cool. We can frame it now. You can start to see where price is and what it's kind of doing. So of course, we know that this is a target, right? This is, well, to me, this is my next target for price. If you watch my premium and discount video, wrong thing. If you watch my premium and discount video, I explained to you that in a premium is where we want to sell, and in a discount is where we want to buy, right? So if the weekly is bearish, if the weekly chart is bearish, what do we want to do? We want to wait for price to come into a premium and then sell. Because let's take it this way, right? Let's say we're shorting. If I place the trade here, right? And we enter at the 0.5, what happens? This trade is a 1-to-1 RR, right? If we're shorting anywhere, so if I just move this high, if we're shorting anywhere in the premium, you can see the RR just moves up. It's just, consistently going up. This is why we don't want to be selling in a discount, because if we sell in a discount, you're risking more than you're potentially winning, and that's not a good way to trade. Because if let's say 2-3 trades of yours hit stop loss, you're going to be in a bigger loss than you can recoup. So for me, it's literally one of the biggest staples in my trading, premium and discount, and just applying it. But cool, so this is our current daily range, right? From this wick down here. So just want to make sure it's on properly. So now what's happened is, right, price has traded into the premium here. There was an imbalance here. It's filled most of this imbalance and it's moved away. Cool. However, I can still see there's an imbalance here and this candle here that we can mark up is an order block. Okay, cool. So now we understand that currently price is in a discount and we don't want to be short in here. And what could happen, is that price may not go into this premium and price may just simply, decide to become bearish from here and just continue downwards. And we basically have to sit on our hands and wait for another opportunity. Or, well, if you go on your lower time frames, you'll see that on your lower time frames, you may be able to find different entries and so forth. But on this specific time frame and this chart, there was an entry offered here as price traded into the premium. And of course, I didn't short here. I didn't have an entry marked up here. I've been waiting for price to trade higher, trade into this imbalance or this order block. So I would have missed it, and next week price may just simply trade lower, and I won't be able to get in until price then again retraces and offers another OTE entry. But cool. So now I have my order block marked, and of course I understand that there's an imbalance here, right? And I'm expecting price to trade up here. I'm not saying it will, but I'm expecting it. So we're just gonna wait. That's the important part, right? One of the first things I told you guys is trading within kill zones. And this is very important. And this is why I was urging you guys to go watch that previous video. And with your kill zones, they're more favorable times to trade. But it's not even just favorable, it's just very important to be trading within those times. And what I would personally wait for is to be inside a kill zone and wait for price to trade into this order block. Once price has traded into this order block, I'm going to wait for a lower time frame model to appear. And you probably hear a lot of traders talk about that. And that's something I'll get into more detail into a different video. But essentially, we wait for price to trade into here and we wait for a clear sign of reversal and then we get into the trade. And now you can see I've kind of combined quite a few things here, right? But it's a process. So we mark out our range, we understand the premium and discount, we understand that we're shorting. So now that we're shorting, we mark up, points of interest inside our premium, because you want to be shorting inside a premium. So, I understand there's an imbalance here. Of course, I've marked up this order block. And, you could even drop down to your lower time frame. You can come to your 4 hour and decide, cool, let me mark up this order block. You can mark up this order block here. These two candles, I would consider them one order block, right? And of course, there's an imbalance here as well. Most of it is already marked up. But yeah, what I hope you guys essentially understand here, right, especially with the example I gave of shorting, understanding how important it is, to use your premium and discount to be getting in your shorts and buys, because you always want trades that have a RR that is higher than 1, in my opinion. For example, if this trade's RR is, let's say, 1.6, right? And I just took a loss. I would have lost 1R, and let's say my next trade happens to be a 2R and I hit take profit. What happens in that next trade is I win 2.3R, meaning I recoup the 1R that I just lost and I make profit on top. Whereas if your RR is 1, or well, let's say it's always 1, that means you consistently need a win rate higher than 50% to be a winning trader, or a profitable trader rather. So for I'm not saying go ahead and find 1 to 10R trades, 1 to 15, or ridiculous RR trades all the time, but just bear that in mind when you're trading. And with our OTE, right, I'm not saying to just use it on our daily time frame. This is why I've been urging you guys to go watch the previous videos if you haven't. Not because I want you to go watch my videos and I get views and all of that. It's genuinely so you can understand that, your OTE, you can use it on your lower time frames. From here, I know price is going to move, or well, I assume that price will move from here to up here, right? From here, this is roughly, just off the top of my head, something like a 200 pip move. I could just sit on my hands and wait for this 200 pip move, or I can get involved in this move up and get involved in the move down. To get involved in the move up, I'd have to drop down to my 15-minute time frame, my hour, my 5-minute, and so forth, and kind of encapsulate that, understand what's happening here, apply the OTE, liquidity, blah blah blah, all those other concepts that are taught to get in this move up. But generally, especially as a beginner trader, I wouldn't recommend trying to trade against the trend. As I just showed you guys and explained, price could just be bearish from here. Price may not come, to this order block. It may not come to this little imbalance here. So personally, I would just stick to trading with the trend, and I would just wait for price to come here, wait for my confirmations and then trade lower. And when would I want to do it? I want to do it inside a kill zone. And on top of that, is price, kind of have a checklist. Is price in a premium? Yes. Am I trading in a kill zone? Yes. Is there news happening or about to happen? No. And the last thing, am I in line with the trend? Yes. We're shorting and the weekly was bearish, so we want to be in shorts. But that's pretty much it for your context for your setups rather. And I have gone into the points of interest, right? So now that we have the context of the setup covered, we can come on to our points of interest, right? So cool. There was an imbalance from here to here. There is rather an imbalance here. I'm not going to mark this up. I'll just zoom in because it might just get too crowded. But from this blue box to this wick here is an imbalance, right? And of course, this is our order block. So, it is really up to you. But for example, you could have been a trader that decided, let me short from the 50% of this imbalance, right? So the 50% of the imbalance sits at the 50% of the OTE. Cool. What would have happened if you got into this? Well, currently, you would have been in profit. Let's just say your stop loss is, your stop loss placement could be in a lot of different places, but let's just say it was here, and currently you would have been, prices up here. You would have been a decent amount of profit. You also could be a trader that decides that you want to short off the order block instead. And there's many reasons for this, reasons that I may touch on in a future video. And what would have happened so far is that you would not have been tapped in. Whereas, the trader that took the start of the premium would have been tapped in and currently in profit. And, they could be wrong. Price could be coming higher. And there's two things that could happen. They either take their profits here and they've already made profit, they can re-enter up here, or their stop loss might get hit, unfortunately. But with picking your points of interest, you don't always want to think, okay, cool, I have a point of interest here, I have one here, I have one here. Let me take the highest one possible so I can get a good R, a 1 to 4. You know, there might be a point of interest inside this wick. There might be a 5 minute order block. You think, okay, cool, let me take this 5 minute order block. Now I have a 1 to 20 trade. Okay, it is possible that price comes up there, but there's a lot of points of interest here. There's an imbalance, there's a bigger order block here, there's another imbalance here. How do you know, which one is price going to come to every time? The truth is you don't. You can make a logical guess, you can make an assumption, but in reality you don't. So when I have several points of interest in my OTE, rather I'll just pick one, usually around the middle, so around the 0.705. And of course there's an imbalance here. So what I could have done is taken the 50% of this imbalance from here, or rather I will potentially take this because price hasn't come up here yet. And then that offers me a good RR, 1.1 to 2.78, and it is in premium. It still, checks all my boxes. And what could happen now with price, price could, this one. So what could happen is price could come, it could either respect my entry, straight down to TP. That would be lovely. However, price might come, it might come up here, retrace, come in, it might trade somewhere higher. Maybe there's a lower time frame imbalance, it trades into that imbalance, then rejects. But what's happened here now, what's important about picking your point of interest, and this is why I'm telling you guys, don't always go for, the one that's highest to get the high R. Regardless of, price trading higher here, I'm still in the trade. I'm still making profit, and price will come lower and, lower and lower, hopefully. And what it is regardless, your stop loss should always be in the same place as well. Because if you watch my video on stop losses, I speak about how your stop loss should be in a place that kind of shows invalidation. And by invalidation, it means that you're wrong. So if price was to break this high, it would mean that price is bullish. So therefore, this is the correct place to be putting our stop losses. And I'm not saying have 120 pip stop loss here. I'm just saying in reference to the OTE, your stop loss should always be above the 1, because that should show once price breaks this high, that is looking for prices that are higher rather than being bearish. But yeah, I think that's pretty much it. So back to the presentation. Last sort of key points that I want to touch on, right? Less is more and cherry picking trades. What I mean by this, right? So I've given you guys criteria, and the reason I've written when and why on my chart, like I said earlier, you want to build a checklist. You want to think, okay, I'm going to take this up. Is price trading in a premium if you're shorting, or is price trading in a discount if you're bullish? Is there news coming up? Am I in line with the trend? Am I inside the kill zone, right? Once these are all confluences, and the more of these you can kind of stack up, the higher the likelihood of it being a winning trade if you're doing things correct. So what it is I feel like psychologically, for a lot of newer traders especially, once you're on the charts, you kind of have this FOMO, this fear of missing out, and you feel the need to constantly be in trades. But rather, if you start focusing on all these confluences and making sure everything lines up perfectly before you get into a trade, it's going to be very, very likely that your win rate is going to, go higher, and you're going to be winning more trades. And of course, it's logical, because if all these things line up, it's only right that, price will respect the bias you have for price, or your assumptions on where it's going. But that is pretty much it from me. Hopefully in some of the next videos we can jump on the lower time frames and talk more about how to spot these reversals, and how to actually execute the trades once I've built this whole framework and this higher premium discount. But yeah, that's going to be coming in the future very soon. Here's all my socials. Any help, any questions, just hit me up, and I'm going to be back very soon.